The pandemic has had a huge impact on the industrial market, not just in Southwestern Ontario, but the entire Toronto area and all of Canada and North America. We've seen a huge amount of migration of industrial tenants and capital outside of Toronto, moving further abroad. And this also happened in our residential markets, and we're seeing it continue to accelerate even as the reopening happens.
Locally, we continue to be impacted by the GTA sprawl. Tenants are having to venture further abroad from the traditional markets to seek opportunities and seek options. Availability and vacancy rates have now compressed below pre-pandemic numbers.
Some of the trends we've seen in the last 12 months has definitely been a tightening of supply. That coupled with a real challenge in supply chains around materials and labor is proving to be a real problem in bringing new buildings to market. We do see that loosening up a little bit as we move into 22 and into 2023, but it's definitely been a big challenge when it comes to supply, which has ultimately driven prices up in the face of huge demand coming out of the Toronto area. We've seen incredible performance out of the industrial market in the last 12 to 24 months. The areas for concern are definitely around affordability, and that again is not just an element of the residential market, but also in industrial. It creates challenges for companies to continue to grow, and it also creates a challenge when it comes to being competitive on a more global scale. We definitely need space to come to market to enable companies to continue to grow and really to flourish in Southern Ontario.
So locally, pre-pandemic, we were experiencing record low vacancy availability rates. We were seeing rental rates increase year over year by 15%, which we thought was unsustainable. We've actually seen the opposite, and those rates have even compressed beyond where they were during those historic lows.
Some of the opportunities we see for investors as we move through the next couple of years are forging new grounds into markets that are on key transportation arteries. Places like Woodstock and Brantford will continue to see rapid growth. Existing strong market performance out of places like Cambridge and Guelph and Toronto will continue to grow. However, we really have seen some of these more tertiary markets lag the exponential growth some of the more founded markets have.
So over the next 18 to 24 months, as we see construction projects slated for delivery, what we'll find is tenants will have more opportunity and more options than they do in the current market.